Sometimes business owners will ask me, Hannah, how much money can I actually take out of my business? How much money do I need to leave it in my business? And how much money can I take out for a personal distribution, for income on my personal side? And I am always trying to help them answer these questions. I think it's a really great question to ask. And I would love it if I had a hard and fast rule that every single business owner could follow. But my answer for today is going to be, it depends. But what I want to do in this video is make sure that I give you guys some really good things to consider and some good tools and some ways that you can think about it when you're trying to decide how much money you can take out of your business so that it doesn't put your business in a difficult financial situation, okay? So this video is going to give you lots of tips and things to think about when you're trying to decide how much distributions will come out of the business, okay? So if that sounds good, stay tuned. If you aren't already subscribed to the channel, I would love to have you here. My name is Hannah Smolinski. I am a CPA. My name is not Clara, but if you want to call me Clara, that's okay. I understand. But this channel is really all about helping you with your small business finances, and I'm very happy to have you here. Would love to have you here as a subscriber. If you have a small business or you help small businesses as an accountant or something like that, you will probably learn a lot by being here. All right. So I'd love to have you here as a subscriber, and also put the little notification bell on as well so that you'll know when we post new videos. We are going to change up the date that we are posting videos. We used to typically post on Thursdays. We're going to be moving that to Mondays. Test it out, see if we like it. Just something to keep in mind, okay? If you are already subscribed and you get those notifications, you might be wondering what's up, okay? Well, let's get into talking about owner's distribution and draws. And first, I want to have a little vocabulary lesson because I am going to use, for the purposes of this video, distributions and draws pretty much synonymously, okay? Now, I'm sure somebody out there is going to say, well, Hannah, that's not right. Distributions are for corporations and draws are for LLCs, sole proprietorships, and partnerships, and you need to call them differently. And I get it. Okay, that's technically true. But for the purposes of this video, what I'm talking about is when an owner takes money out of the business to pay themselves. Okay, and whether it's a distribution or a draw, that functionality is the same. So I'm going to use those terms interchangeably, and I think it's totally fine. I'm not going to be misleading anybody by using those terms interchangeably for the purposes of this video. Okay, now I do want to say that this video is for sole proprietors, LLCs, partnerships, and S corporations where you have that flow through entity. If you've been following the channel and you've been watching all of our videos about equity, you're going to understand the concept of a flow through entity. So this video is really not for corporations because corporations have a different way that they need to think about distribution. So really not for C corporations. It can be for S corps. Okay. So the next thing we need to talk about is draws. When money comes out of the business, it typically needs to come from profits of the business. So sometimes owners will get into the habit of taking money out of their business without any regard for profit in the business. And that's not really what we want to be doing. You can actually get into trouble. You can go and check out the other video we did on if owners' draws are taxable. And sometimes you can trigger taxes if you are still taking and distributing money out of your business and the business hasn't earned that much money. So if you've taken a loan, you can over distribute money out into the business owner, and you do not want that to happen. So most of the time, what I recommend is that business owners first look at their profit before they make decisions on distributions. Okay. Now that might be really duh to a lot of you. You might be saying, of course, Hannah, how can I pay myself if I don't have a profit? But a lot of people don't do that, okay? And then I will also say that I'm going to give you this example talking about profit, but this is a cash basis profit that I'm talking about. If you are an accrual-based business, which we have a video about cash versus accrual as well, if you are a accrual-based business, you need to look at profit, but you also need to look at your cash flow, okay? So because I'm talking most of the viewers on this channel are going to be cash basis, I'm going to be speaking more to that. If you are accrual based, just remember you need to really be looking at your cash flow, okay? Because your profit and loss could show that you made, really great profit, but you didn't actually get that cash in the door. So you might need to be careful about distributing money to yourself if you don't actually have the cash to do so. Okay, so let's talk about profit for a second. So remember, it's revenue minus expenses equals profit. Now, profit has to do a lot of things for us in our business. It is not just, okay, we made $10,000 in profit, I can take out $10,000 and take it and go and put it in my personal bank account. No. The profit in the business has to do a number of things for us and for our businesses. So it's kind of a workhorse and we need to put that profit to work, okay? So the first thing that your profit needs to do is it needs to help you cover your tax liability for the money that you're making. So for a pass-through entity, like the ones that we're talking about, the ones who are watching this video right now, and when your business makes a profit, that flows through to your personal income tax returns, and you're going to have a liability to pay because your business made money, okay? So we like the business to be able to pay for those taxes. So the first thing your profit needs to do is it needs to pay your taxes on the profits that are earned. The second thing is that if you want to build up any kind of savings in your business, that has to come from the profits generated in the business. So it's there's no way to really build savings without taking out debt if you're not earning profits. So you have to make more money than you spend in order to build up savings. And similarly, you have to make more money than you spend in order to repay debts. So profit also needs to be able to repay debts for your business. The other thing that it needs to do is it needs to be able to provide extra money to make additional investments in the business. So let's say coming up that you are wanting to hire a new website designer, and you know that it's going to cost you $10,000 to get this new website. You might want to reserve some of your profits to be able to reinvest it and actually pay for that website with cash rather than having to put it into an accounts payable and then try to pay it off sometime in the future. You might want to think, oh, I've got the money now. I will, be able to use that for that investment I want to make. Or maybe it's, I know I'm going to hire somebody in the future and I want to make sure that I have enough money that I can pay that person for a couple months before they start making money for me. And then the last thing that profit needs to do for you is that you need to be able to pay yourself out of it. So if you are a sole proprietor or a single member LLC being paid as a sole proprietor, or you're a partnership, the most of your compensation is coming from distributions or draws out of your business. And so the profits need to be there in order for you to take any kind of money home. Okay, so that is very important. We need business owners to be able to take money home. So you need to have a profit that covers these different things. Now, not every business owner is going to have the need to build their savings and repay debt and make new reinvestments. So you need to decide, are you going to need to, save some money for debt repayments? Are you going to need to build up your cash if you don't have enough months of cash in your business? That's another video. I just keep mentioning these videos because we've done so many. That's another video that we have about what is months of cash. So all of these things, you need to decide what applies to you. So this is why I can't give you a hard and fast rule. There's going to be some of you that all of your profits need to go to debt repayment, or after taxes, maybe all of it needs to go to debt repayment because maybe you have really high interest debt and it's actually drowning you, and the only way you can get out of it is by paying off the debt. And then maybe some of you have great cash and you don't need to save any more cash, and maybe you don't have any debt, and maybe you don't have anything you really need to reinvest in right now, so you can actually take a bigger personal draw. I'm going to show you guys a quick little spreadsheet that I created just to kind of help you visualize this on what you need to think about, okay? So let's go ahead. I'm going to show you this spreadsheet, and we will just hop in and I'll give you a really just clear example about how you might want to think about this, okay? So let's go ahead and hop in. All right, so here we are in just this really basic calculator. I don't have this available for download, but if you guys really want it, I'm happy to make this free for people. I just feel like it's so simple. I don't know if it would really save anybody any time by the time they download it. But let's just go through an example here. Let's say, and you can look at this on a monthly basis, a quarterly basis, or an annual basis. You can look at this every couple months if you want to. But what I like to do is to think about whatever period of time you're looking at. So if it's a month, put your profit in here for that month and then think about these monthly bits. So just think about, are you looking at this on a monthly basis or a quarterly basis, whatever it is, just adjust each one of these boxes to also be on that period, okay? Let's say your monthly profit was $10,000, okay? I put in here an effective tax rate of 25%. So This is a lot of small business owners are going to be somewhere between 20 and 30%. So I put 25 in here as an average. If you don't know your effective tax rate, you can ask your CPA and they can give you a number, or sometimes it's even printed on the front of your tax return in those first couple pages where they're explaining the tax return to you. So you might be able to find it there. And then if you really don't know, you can estimate high. And I would do 30 to 40% is going to be at the max. But I like to do 25 to 30% for most small business owners because it's usually pretty accurate. Okay. But you can always dial that in and get a better effective tax rate by actually talking to your CPA. Some of you will be in a much lower tax bracket, and that's okay. So for every $10,000 of profit coming in this situation of 25% of effective tax, I would need to make sure that I'm saving $2,500 to pay that future tax bill. So that's money that I would just put straight into a tax savings account. And then I have down here $7,500 left over. And this is where we need to make those decisions of, what do we need to do here? Now, if you are an owner and this is your only form of compensation is the money coming from your business, you probably need to prioritize your owner's pay before some of these other things because you might not be able to pay your rent or your mortgage if you don't have money coming in. So let's say that you've decided that $5,000 is your minimum monthly amount that you need your business to bring it home for you. So let's go ahead and put that in as $5,000. And if you had a really amazing month, you could make this number higher after you do your other things. But what is that minimum? You always need to make sure you get to your minimum. Okay. So then we would say, what other goals do we have? Do we have any debt? Maybe in this situation, this business has no debt, so they don't really need to worry about it. Or maybe they have a tiny little credit card they just want to go ahead and pay off that has been lingering there for a little bit. And then savings. So they're actually working towards a savings goal and they're going to use the rest of their money to go into their bank account and just save it. Let's say they didn't have anything that they really needed to spend money on right now, no, really big planned reinvestments. So all of that money is going to go into savings. Savings can also be kind of considered a reinvestment because you put your money into savings and you might be spending it later for other things. But when I say reinvestment, I'm really thinking of what are those big intentional purchases that you want to do in the business or you kind of want to up level in some way. You might want to start saving money specifically for that stuff, not just the general cash savings of, having a few months of cash in your bank account. Okay. Then, here we can say, okay, I have zero profit left. It's all been distributed. We know that the owner can be paid $5,000 and that this is how we know we can plan out our profit. Okay. And you can split that in different ways. You can write the owner's check, you can move the money into the savings, and then you can move the tax money into your tax savings account and then go ahead and repay that debt. Okay. So this is very actionable on how you want to distribute. But I would say this is really good for you just to remember that profit will pretty much never be 100% distributable to the owner. I will say that there are times that if the owner maybe has stored lots of cash in the business. This happened with a client of ours. They had millions of dollars actually in cash, and it was not needed in the business. So the owner took a very large distribution in order to go and invest in personal things rather than keeping the money in the business. So if you have stored up lots of cash in a business, you can take it out, and then even if the profits don't show oh yeah, you can take $500,000 out because you made $500,000 in profit, but because your prior retained earnings, as you've earned over the years, has built up, you can take large distributions out of the business like that. You just want to make sure that you're not going into that negative equity situation if you're an S-Corp owner that we mentioned in that video about owner's draws and whether or not they can be taxable. Okay, I hope that's very clear for everybody now. Let's give one more example here. Let's say you're looking at this on an annual basis and you only want to do one distribution at the end of the year. Maybe you're an S-Corp owner and you don't need a monthly draw, but you like to give yourself a year-end bonus in a distribution based on how well the business did. So let's say that you earned $200,000 in the business throughout the year. And in this case, let's clean that out. In this case, you earned $200,000. Maybe you were already making significant debt payments on a loan throughout the year, and you paid down $60,000 in debt. So that's kind of not available for you to use anymore. And then you built up your savings account with another $50,000 in your savings, and you don't want to dip into your savings to distribute any more money to yourself. If that's the case, then you would have a leftover $40,000 to distribute out in owner's pay. So maybe you give yourself a bonus check. You write your check for your distribution at the year end of $40,000. Okay, so this is another way that you can look at this. That's a monthly example and an annual example. So there's lots of things that are going on there. Every situation is going to be a little different, but I just want to give you really simple, easy tools and have you think about this so that you feel a little bit more empowered to actually make this decision for yourself. And yeah, you can understand the mechanics of it. None of this is very hard, and I just want you guys to feel empowered to be able to do the right thing for you. All right, thank you so much for being here. See you next time.